Welcome to the Deep Dive.
Great to be here.
So today we're digging into something pretty significant in the tech world.
Those new U.S. restrictions on Nvidia chip exports?
Exactly. Specifically, their H20 chips heading to China.
Right.
And it's not just about Nvidia, though they're potentially looking at a, $5.5 billion hit?
Yeah, that's the figure being reported. A potential charge of up to $5.5 billion just this quarter.
Huge. But we also want to explore who might, benefit from this, like the Chinese tech company Xiaomi.
That's a really interesting angle.
We're using a piece from The Motley Fool as our guide here, trying to unpack what's going on.
Okay.
So the goal, really, is to understand these dynamics, the consequences for Nvidia, the broader tech scene.
And why Xiaomi specifically might be positioned to, capitalize.
Exactly. Let's get into it. So first up, the Nvidia side.
Okay, so the article lays it out. This $5.5 billion potential charge is because of these new U.S. rules stopping their H20 chips going to China.
And these H20 chips, they're AI accelerators, but maybe not the absolute top-end ones.
That's right. They were actually sort of designed to comply with earlier restrictions, ironically.
So this is like another tightening of the screws.
It definitely looks that way. It fits into this broader pattern we've seen of the U.S. trying to limit China's access to advanced tech.
And it's not just Nvidia feeling the pinch, is it? The article mentions others.
Correct. ASML, the Dutch company making those crucial EUV lithography machines for chip making, they're facing similar pressures.
Right, essential tech.
Absolutely. And AMD, NVIDIA's big competitor, they're apparently looking at an $800 million write-down.
Wow.
Yeah, and that's linked directly to this H20 chip policy, too. So it's definitely having wider ripples.
It really paints a picture of a coordinated effort, then.
It seems that way. Restricting access to the foundational tech. But, restrictions often have unintended consequences.
Like what? Pushing China to innovate faster.
Precisely. That's a key point the Motley Fool piece raises. The likely secondary effect is China doubling down on its own AI chip development.
Makes sense?
They even draw a parallel to how DeepSeek developed its low-cost AI chatbot. Sometimes these barriers actually act as accelerators for domestic R&D.
So instead of slowing them down, it lights a fire under them.
Could be. Necessity driving innovation,
Which brings us, naturally, to Xiaomi.
Right.
Now, I think most people know Xiaomi for smartphones, maybe their new EVs.
Yeah, they're getting a lot of buzz for the cars.
But the article suggests they're much more diversified. What else are they into?
Oh, quite a bit. Besides phones and EVs, they do computers, lots of other consumer electronics.
Right.
Plus, they have revenue from advertising, online gaming, even fintech. It's a pretty broad tech ecosystem.
But the key thing for this discussion
is their growing involvement in chip design. The Motley Fool flags that as a really promising growth area for them.
Okay, chip design. That's where it gets interesting with these NVIDIA restrictions. What are they actually doing there?
Well, the article details their recent push into designing their own silicon, specifically working on 3-nanometer system-on-chips, SoCs.
3 nanometers. That sounds advanced. That's cutting edge, right?
It really is. A smaller nanometer size usually means more power, more efficiency. It's a big technological step.
And the article suggests they might actually produce these soon.
Yeah, it mentions their goal is to start mass production this year, if they pull that off.
That would be huge. China's first 3-nanometer SoC.
Potentially, yes. A major milestone for their domestic capability. And it's not just the hardware design. They're also investing heavily in AI itself. The piece mentions them building a 10,000 GPU cluster just for training AI models.
10,000. Okay, they're serious.
Shows real commitment to being a player in AI development, not just a user.
And Xiaomi seems to move fast. I mean, look at their EV launch.
That's another great point from the article. They went from zero to launching a car and selling, 135,000 units in just 3 years.
Incredible speed.
It really demonstrates their agility, their ability to execute quickly, which is crucial if you want to jump on an opportunity like this potential chip gap.
So having their own advanced AI chips would fit perfectly with their EV ambitions too, right? Autonomous driving and all that.
Absolutely. That's a very logical connection. Advanced driver assistance, maybe future autonomous systems, they all need serious AI processing.
And controlling that tech in-house becomes a big advantage.
Especially if getting chips from international suppliers becomes trickier.
So that $5.5 billion potential loss for Nvidia, it might just be the beginning of the opportunity for Chinese firms.
That's what the Motley Fool piece suggests. As these trade tensions potentially ramp up and maybe more restrictions come,
the overall market opportunity opening up in China could be much bigger.
Could be significantly larger than just Nvidia's immediate loss, yes. As American companies are forced to pull back, someone has to fill that void.
And Xiaomi looks like a prime candidate.
They certainly seem well positioned.
Let's talk about Xiaomi's health then, financially. The stock's been doing well.
Extremely well, according to the article, up 157% over the past year, and that was before this latest trade issue flared up.
Wow. What drove that? Mostly the EVs.
Largely, yes. The success of their SU7 sedan really boosted confidence, plus prospects for future models like a YU7 SUV and plans to export.
So the market likes their diversification into cars.
Definitely. And they followed that up with a $5.5 billion secondary stock offering.
Raising more cash to invest?
Seems so. Investing in new tech, likely including AI and chips.
And their recent results back this up. They're actually making money.
Oh, yeah. The piece highlights strong numbers. 35% revenue growth last year, hitting $50 billion.
Growth.
And adjusted net income jumped 41% to $3.7 billion. So it's not just hype. The financials look pretty robust.
That gives them the firepower to invest then.
Exactly, to invest in what they call foundational core technologies. And they've explicitly mentioned integrating AI deeply into everything they do.
So, looking at the bigger picture, it's kind of ironic. The U.S. policy is almost acting like protectionism for Chinese tech companies.
That's one way to frame it, as the Motley Fool observes. While the intent might be to slow China's overall tech progress,
The effect is to create this protected space for domestic players like Xiaomi to grow stronger.
it creates a significant opening, yes. And there's another potential angle the article touches on.
Which is?
Potential backlash against American brands in China. Nationalism, maybe?
So consumers might prefer domestic brands if tensions are high.
It's a possibility. The article specifically names Apple in smartphones and Tesla in EVs as companies that could face more pressure.
So Xiaomi could benefit not just technologically, but also potentially from shifting consumer sentiment.
It's plausible. It adds another layer to their potential advantage in their home market.
Fascinating. So for someone looking at the tech investment landscape,
The Motley Fool basically positions Xiaomi as an interesting alternative. If you're looking beyond, say, Nvidia and want exposure to China's growing AI and tech sectors.
Xiaomi becomes a company to watch closely.
It does. Obviously, international investing has risks. Geopolitical factors are complex.
Sure, always caveats.
But given their diverse business, their speed, their financials, and now this potential opening, they're definitely noteworthy.
Okay, let's try and wrap this up then. Key takeaways.
Well, first, the immediate financial hit to Nvidia from these U.S. export roles is potentially quite large. Billions.
Right. But second, this is probably going to turbocharge China's own efforts to develop domestic chips.
Very likely. Accelerate that innovation push.
And third, a company like Xiaomi, already diversified, investing heavily in chip design and AI, proven ability to execute fast like in EVs.
They seem really well placed to potentially grab a significant piece of this opportunity across multiple sectors, not just one.
Yeah, it seems like a convergence of factors favoring them right now.
It does. It really highlights how interconnected global tech is, but also how quickly these geopolitical shifts can reshape the landscape.
It really makes you think. And maybe that's the final thought for our listeners. Given all this complexity, the supply chains, the politics, what other unexpected changes might we see coming down the line in AI and semiconductors?
That's a great question. What are the next ripple effects?
Exactly. Something to chew on. Thanks for joining this deep dive today.
My pleasure. Fascinating topic.